Welcome, everyone. I'm Greg Schnell, here to host the Market Buzz. This show looks at the weekly setups across the U.S. market. Using the tools available on stock charts, we'll be looking for long time frame trades. Please subscribe to my articles and Twitter feeds. You can also enter comments in the chat room for me to answer at a later date. So, lots going on here. We're trying to make fresh new highs this week, and we're pushing up hard. One of the big things to watch for, I think, here is as we go through these highs, how do we do it? And so we're going to talk a little bit about that today. So on the agenda, defensives are leading the pack, and you might wonder what that means, but I'll get into it on the charts. It's easier to show there. But there's been a big change in leadership, so want to show that. Breadth is holding on some measures, and I just really want to mention it, that breadth is changing its tone a little bit, mostly things like the Canadian market, which would normally break down before the U.S. market, is starting to show some weakness. So I would just say keep watching for the Canadian market. We tried to break out to a new high a couple weeks ago, and now we're having trouble holding that high. So as that rolls along, we're going to go through that. The big thing for me on all of these is just trying to make sure that we have we're in the right sectors as we go forward. And energy has, even though oil's up high, the energy stocks look really sad. And I thought I had already turned this off, but obviously not. Thanks. And an around the world trip, I just briefly want to look at all of the markets worldwide. So let me get into it. And again, there's lots to cover off here, but I think the big thing is around the world, things look pretty good. I would say on the weekly charts, they don't look as good as on the monthly charts. But let's get into that. So first of all, the big issue I have as we go forward here is we're starting to see that this is the defensive side, and over here is the growth side of the stock market. And so we see discretionary, communication services, technologies, industrials, materials, and energy. These are considered growth. And here I've flattened out the these are the absolute values over the last week of which sectors are performing better. And you can see quite clearly the defensives have started to rule the roost. Now we can right click here and put a cycle line on here. And essentially what that means is when the market is in full-blown defensive mode, we would see this side lead. Now, 1 week does not make a trend, but it definitely is starting to be worrying. And the reason is because if we go back 2 weeks, these technology sectors were doing really well, and now they're not. And so I think that's the big change that we're starting to see, is that this technology that was being heavily bought into was starting to weaken. And even last week, technology was probably fourth or fifth leading sector. Communication services was still okay. But the big change we have here, I think, as we go forward, is if this side is going to start to lead the party, then we want to start positioning ourselves in more defensive places. Okay, so with that as a start, I think that's an important place to clue in on. But let's just quickly go around the world and look at some of these global indexes. And what you see here is, here's the Bovespa out of Brazil, and this is a commodity-based country. But what you'll notice is, generally a trend of lower lows and lower highs since February, and they had a brief push to new highs in March, and then that failed to hold, and they've been gently cycling down. Now, that doesn't make it a bear market, but the problem is you're not making any money in it either. So continuing to watch that one, and here's Russia, and this one's really more difficult to see. One of the big things that's happening here is this is clearly a trend of higher highs. So that's very nice to see. One of the other bullish parts of this, if we just go up here and get the monthly chart, is what you'll see is Russia's actually trying to push through a big level of resistance right here, and it's at the top of the Bollinger Bands on the monthly chart. And again, yesterday being month end, now we can analyze these charts, but we're also getting a turn up on the PPO. So perhaps the world is going to break out into a new commodity bull market. And if that was going to happen, that would be very bullish. So that's kind of one of the things I want to watch for over the next few weeks here, is just to see what happens as these charts start to change. So we should, if the defensive start to lead and we start to see energy fall, I'm expecting that we start to see some of these foreign markets fall too. So there'll be a clue to help us with that. Now, Australia had a really nice push last week, closed on fresh new highs, and then immediately this week it hasn't done anything, so it rolled right back over. Not that bullish. So I want to keep watching that. Again, these are commodity countries just to see which way the commodities are going. And I've grouped Canada in that group as well. But here is the 16.6 level that Canada was trying to get through from the July high. And again, Canada was falling for 3 months before the US started to roll over. So it can be a warning shot. It doesn't have to take 3 months. You can see in January, it basically participated as the US market fell down. But the failure to hold the breakout here, we've got a couple more days, but we want to make sure that this starts to hold up. And one of the reasons I don't think that's going to happen is that the advanced decline line, I'm going to actually, let me zoom in first and then just come back out to this bigger picture. One of the things we're starting to see is the advanced decline line is moving down into this negative territory. Now it's done that a couple of times before. It wasn't testing the prior highs though, which is a big issue. And on the high-low data, we're only getting like 2, 3, 4 for net new highs. So net new highs is the number of 52-week highs minus the number of 52-week lows. And the problem you have, obviously in a big bull market, you want lots of net new highs, and that pushes the market up quite easily. Here we started to have some good ones, but you can see we made our highs in net new highs 2 months ago, and now we're just barely hanging on to the 0 level, which means, 1 or 2 or 3 more net new highs than lows. And it's very difficult for the market to push up in that case. Now, starting to see this roll over right here as this trend starts to weaken on both net new highs and on advanced decline is more concerning. Now, I mentioned that I'm not a big advanced decline line fan. I just find that it kind of tops out with the market. There is one thing that does happen though, and what you'll see here, we all remember in 2007 that the market topped in October, and so you had a lower high here, and then Canadian market actually pushed up and went on a final run in June of 2008 on the back of oil. But what you saw was the advanced decline line continue to erode away. And what we have here is, even though we're testing higher highs, so on this high in June of last year or July of last year, we broke above the January high, but we made slightly lower highs in the advanced decline line. Well, now we're back here up at the same level, but we're making a lot lower highs in the advanced decline line, and we saw the same thing in 2015. So the Canadian market, I think, can be a little bit of a canary for us. And one of the things I'm starting to see is, it's been spending 3 weeks trying to get through prior highs and hasn't been able to. And now all of a sudden, we just don't seem to have the breadth. So one of the things I'm watching for here, and again, it's Wednesday, so we haven't got a finished week, but quite clearly last week was spinning top. And this week we're just sitting right on the low. So I think if we start to take out last week's low, I think the Canadian market could be a little more volatile than we might want it to be. Here's the Shanghai Composite, and it had an awful week last week. It basically had a huge outside range bar and took us down to new 1 month lows. And then this week it's just trying to hold that level. So can't give up on it yet, but I would just say that was a pretty nasty week. And then this week to make lower highs and lower lows is a bit of a problem, but so far we aren't much lower than the close of last week. So keep an eye on that Shanghai. I think that's going to tell us more about commodities than anything else. The Hang Seng here, so this is for Hong Kong, hasn't done anything for 4 or 5 weeks while the U.S. market continued to go higher. And so the concern I would have is if this doesn't start to pick up, there might be more news around the trade front that we aren't picking up on, but this is seemingly pausing. And when early in the trade talks, that was quite a bullish scenario. So keeping track of that. So here's the Kospi, and you can just see the South Korean market hasn't done anything for 3 or 4 months. So, it made its high roughly 2 weeks ago, but again tried to break out to New Year highs and then fell down last week. And then this week it's got an inside bar, but momentum is right at the zero level. So pretty important place for that market. The Nikkei, I was scared of it around the 21,000 level when it was hanging down here. So it's had 3 or 4 weeks of up, and it's sitting above its 40-week moving average. So that is bullish. And as long as it stays that way, that's great. It's right at the zero level on the PPO, so I'm a little uncomfortable with it. I want to see this market really do a lot better, but it continues to just hang here. And one of the things that we see in a bear market, and we've covered this off before, but on the RSI, it won't get above 60 usually in a bear market. So once it goes down here into this low 30s or below 30, that kind of gives you your bear market signal. And you can see all through this period in here, we stayed above it, and then we dropped down, and then it can't get back above the 60 level. So we're right at the 60 level. And if I just open this chart up a few years, you can just see how it goes through periods of above and below. So in here, it stayed below the 60 level, and that was cautionary. So the first kick down is the one that kind of tells you to be cautious. And then, so we've just had that, right? We've had our kick down and then rallied back up. In this case here in 2015, we rallied down, had a rally back up to around 60 and then fell back down. So the Nikkei is just literally sitting right on the fence line of where we'd start to be more impressed with its behavior. It's not there yet, but it definitely tells us to be cautious as we get to this sort of height. I have Indonesia in here because they have 100 million people, but you can just see they had a brief spike 2 weeks ago to make new highs, couldn't hold it and have pulled back, and are now trying to hold the 20-week moving average, but momentum is clearly drifting lower. So not bearish yet, but not the robust look we want. Here's India, and it's been trying to get through this prior market high for 5 or 6 weeks. So the problem, again, is when you get up to these prior highs, you do want to push through them. And, it's okay to pause for 1 week or two, but you don't want to spend a month and a half here. And that's kind of what India is doing right now. So that's a bit concerning. The German market has actually been one of the ones that we were worried about as it got to the 40-week moving average and spent almost 5 weeks here. And then it worked its way through and has continued to rise up every week. I will say the bars are getting shorter each week. So maybe the upside momentum is starting to wane. And again, we have that same sort of system going on the RSI where it's sitting up around 60, 63. If it got up to 70, then we'd call it a new bull market, but at this point we haven't seen that yet, so a little bit concerning here. And so we've got let's just keep watching how that one goes in May. The French market has already pushed up close enough to 70 to me to say things are good here, but again, they're trying to get through these all-time highs, and you can see that they have been 5,500 for a long time. Getting to 5,600 is like 2% more, and we've spent a couple of years trying to push through this level. So pretty important for France to start getting some wheels under it. Here's the London market, and what you see here is a significantly lower high, and again 4 or 5 weeks sideways. So while the US market keeps going, you've seen a lot of these other world markets start to level off. The good news is Germany has not, so that is positive. Here's Italy, and it's actually holding up quite well. But again, 4 or 5 weeks, in April, we're basically where we started the month. So nothing really to report there. It was still positive on a monthly chart, but at the same point, a lot of these markets are just sideways for 5 weeks now. That was Spain. So let's go to the S&P, and now you see the tone change. This one is straight up, but we are testing the prior highs here, and so it's a good place to just keep cautious or be aware of the problem of trying to get through a prior high. And if we can't do that, then we're going to see the market start to pull back, and in this case, you see the same thing with that 60 period level on the S&P 500, the RSI indicator. We're at 64, so it's probably at the top end of the scale. If you were going to mark a new bull market, I'd say it's very close to hitting that right now. What we want to watch for is just, can it break through and hold that level? So this is a weekly chart. So this is the first week breaking to new all-time highs. We broke to new closing highs last week. Now we're trying to break through intraday highs. And so far we're doing that. We have a Fed announcement a little bit later today, and I think that'll add some spark to the fire. And here we go. This is the NASDAQ, and it looks much better. It broke out 2 weeks ago and is pushing up, and it's holding right up near the top of the range. So this chart still looks bullish. And again, those big tech companies have been great. The real problem is just that that sector chart that I showed you, where, you know, now in the last week, again, we're just not getting the push. So here, this is starting to improve. Did this move over? Yeah. So a little bit coming in on the back of Apple maybe, or something like that. Okay. So just to continue on that theme, let's go look at a couple more. Just the one thing, one of the things I want to watch is, what does oil do? And again, I just think it's a good economic indicator. So we've got 3 or 4 weeks sideways now for oil. I know last week was a fresh high, but basically we're trading in the 4-week range right now, and that was a bit of a false move so far. And again, that same thing on that bearish perspective on oil, we're sitting right at this 60 level. So a lot of these charts are right on the kind of where you'd expect a rally to die if you were to use the RSI. Okay, so here's gold, and again, it's sitting right above 50, but our last signal for gold was bullish, which is really interesting. So lots of things to watch today with the Fed meeting. By Friday, you kind of really want to have a feel for which way gold is going to move. And it's been, yesterday morning it thrusted up, today it thrusted up, and we're seeing the bond market start to push higher in price, lower in yields again, and sometimes gold and TLT move similarly. So just keep an eye on that partnership and see if that's going to continue. The US dollar broke out last week and has now had pulled back inside the range. And again, we just don't have a direction yet on the US dollar, but I think if it was going to start to soar, it needs to do that right away. And then that's going to kind of break down the commodity markets. If it's going to roll over, you know, usually a failed breakout gives you a bigger than average move to the downside. So let's keep watching, but the US dollar on the back of the Fed today should be a pretty important clue. If commodities were going to start getting stronger, we should start seeing the Canadian dollar improve, and we're just not seeing that yet. It just continues to drift lower. And last week made lower lows. This week so far is an inside week, but momentum is flat at best. Well, overall being negative. So those are some of the concerns I have. Now, if we go look at the arithmetic chart, so this is just a different way of looking at the indexes, the value line geometric. And what you see here is we have these previous highs on the chart, and we made our high back in 2018, which is fine, but we pulled back down. This chart has an interesting trend in it, and here was the major low back in 1991. And then we came in here, and this was actually 1996, and it literally blew right through. But what happened after that was the market topped out, and it ended up finishing on the next major low. In 2008, it bounced down, and the major low was in October. It went on and marked pretty close to the top up here. And now the question would be, so which part of this cycle are we on? Are we on this part of the cycle where we go back kind of like we did here and roll back down and make a low, or like we did here and roll back down and make a low? Or, will this come up and we continue to rise up into the corner here? The one thing I would say is that this chart has some interesting clues showing up on the full stochastic. And sometimes the market tops on the right shoulder here, and now, and then when the full stochastic rolls over and isn't very high, you end up marking the top with a lot lower full stochastic. So then we had it in 2007. Market topped here. This is actually a July high, and the market actually topped on this one here. The October high, but in 2015 it was May, and so the market topped up here. Now what we have is we've bounced all the way to the low. We just made new highs, and so if the market was to top out here, this would be similar to some of the things we see that the the market tops when the full stochastic actually is in weaker territory on this particular chart. So it's something to keep in mind. Again, when everything's bullish, I just want to be watching the caution signs. You're not trying to find problems, but I think the important thing is we're testing prior highs. We've got lots of charts that are, the advanced decline for Canada as an example, giving clues. The bond market continues to give more clues. So as all of these clues start to come in, I think it's really critical for us to be aware of the trend. And on the bond market here, this is the 10-year, and we're starting to make lower lows and lower highs again after pushing up for 3 or 4 weeks, and we're right up against this trend line. So I wrote an article yesterday. It's in the Don't Ignore This Chart blog, and it's about the bond market in general and how it's shaping up in ahead of the Fed. And if anything, it was marginally to the bullish side for bond prices, but it wasn't really decisive. I would just say the market is very undecided on the way this wants to go. Here's the 5-year. And what's happening on the 5-year, we bounced off the 50-period moving average, and now we've pulled back down and we've rolled over right at zero. So this looks to me like it wants to go lower. Again, that RSI, and this is on a daily chart, so I don't trust it as much, but you can see it's having trouble getting above this 60 level, which we'd expect it to do in a bull market. So it doesn't look like it's ready to switch yet. Now, the 2-year chart has a couple of things that are worrying, and that is that this big major trend line is under threat, and it was under threat in 2016 as well. So it's important to watch. We've rolled over on momentum, and this thing is pretty much straight down as utilities have started to become more into play. So with that strong performance out of utilities, I think it's critical that we, again, keep an eye out for other things that might be changing. This 1-year chart won't help us much, but this topping in the 2-year and now the rollover and really hasn't been able to turn up yet is kind of critical. Now, I have one chart that I like to use to help me with the direction of bond yields, and that is the BlackRock Municipal Bond Fund. And what we see is, this fund is still pushing to higher highs, and typically it helps lead the direction of the bond market by a couple of weeks. So when people are seeking the safety of bond yields, it's not a bad place to be aware of. And again, in early October, this thing started to turn, whereas the lows in the bond market were made in the end of October. So it's just stuff like that little bit of clues that we can try and use. Now, I kind of thought the market was going to roll over here with this low volume coming in down in here. It did not. It just kept grinding higher. So I think it's a bigger, there's a definite concern out there. And if if we just go look at whatever, I'm going to go grab a chart that I like to use all the time here. And again, it's just a vertical stack of the markets. And what I've got on this chart is, here's the VIX, and you can see it's above its 100-period moving average on a 60-minute chart. Here's the S&P trying to hold the highs. Momentum has basically been coming down a little bit, so we'll see if it's got any more thrust power. But here's the NASDAQ stuck in the range kind of for the last 7 days. No big deal. The Russell, again, tried to get through the 1600 level, failed again, and rolled back down. It's now bringing into negative territory. The Canadian market is breaking below its 100-period moving average, so it's the weakest of all of these markets. And that's okay, but it's good to use it as a clue. Natural gas seems to want to be breaking out to the upside as oil's breaking to the downside. And here's gold, and again, this will be very interesting because look at the TLT chart and the gold chart. They move similarly, and so far it had the big push early in the hour, but is closing in the middle of the range. And again, with the Fed meeting later today, we got lots to talk about. And then we have the US dollar. Is the US dollar actually going to roll over, or does it start to bounce off this 100-period moving average? Or on the daily chart, it would be a 20-day moving average, something like that. And if it was going to start to bounce out of here, that would be an important place to watch. So I'm seeing like this bond market push here suggests to me that bonds prices are going higher, and the market is trying to get through these prior highs. But this chart of the Russell, let's just go back, maybe grab this one in here. Actually, I'll just go up and do it from the beginning. So here's the Russell. What you see is just the amount of work it is trying to do to get through this 1600 level. And we've been trying to do that for months. And again, we got to 1603, so everybody gave it an all clear. And the next thing it did the next day was pull back. So this is a very important level for the chart. And I get it. There's a whole bunch of people that are bullish for all the right reasons. I think the biggest thing is around the world, a lot of the charts have moved sideways for 4 or 5 weeks. And so we're still trading in a range, and I think we need that global growth to help lift the S&P. So we've had a nice big rally, and now the question is, can it continue? But the RSI is giving us clues that maybe it can't. So lastly, I want to get into the energy sector, and the reason I want to talk specifically about energy is it's one of my favorite it's one of my favorite go-tos in terms of commodities, because I live in Calgary and that's a big energy town. But more importantly, the big thing for oil here is we're starting to see all of these charts. So here's the oil services now down below its 50-day moving average. We're seeing XOP below its 50-day moving average, XLE below its 50-day moving average. And this is while oil's well above, and the bullish oil up here, and the bullish percent index is well above. So all of these starting to implode here doesn't bode well. And again, they haven't really done anything. So I like to think of oil as an economic indicator. And of course, it's got Venezuela issues, Iran issues, Saudi Arabia issues, pipeline issues. There's a whole bunch of things that affect the price of oil. But the main context for my look at oil is basically the fueling juice that keeps things moving. And when we need energy, we're probably building something. So if oil starts to pause here and these oil charts start to break down, I think it's probably an important place to be aware of that we're losing some of the demand for oil worldwide, and as that starts to come in, that would be a bigger problem. So try and keep that in the back of your mind. Just in general, what is oil doing? And I don't want to make it sound really bearish, because there's lots of reasons for oil to go higher, and the chart doesn't look that bad. But you can see the prior highs last year and now coming back up, basically what the Russell has done and some of the other markets. Okay, gasoline is an interesting one just to point out while we're here. And gasoline still hasn't got through the May highs. It's briefly testing these September highs right now. So it's another good indicator of economic demand, and we'll just see if that can start to keep running. Doesn't always work, but it's a good place to be aware of. This is heating oil or diesel fuel. You can just see, again, none of these charts are breaking out to the prior highs. So while the S&P is doing that, we're not seeing this big euphoric push that I keep hearing about in the news media. So it's one of the things that's got me paying attention to the differences. And again, if I'm wrong, at least I'm aware of the issues. But if things are going to continue to run, some of the tech stocks are just doing great. Shopify was knocking it out of the park. Apple had a really nice earnings report this morning. So lots to go on. Okay. So with that, I'm going to wrap it up. Thanks for taking the time to join me on MarketBuzz. MarketBuzz airs live on Wednesdays and Fridays at 10:30 a.m. Eastern, 7:30 a.m. Pacific on Stock Charts TV. You can also catch replays on the Stock Charts YouTube channel or Stock Charts TV. Thank you. Bye-bye.